A historically massive movement of money has already started. Experts estimate the total value at over $60 trillion, a figure that dwarfs the current market cap of the entire tech sector. Identifying where this capital is flowing is the primary task for anyone looking to build significant wealth in the coming decade. Despite the scale, the vast majority of people are currently looking in the wrong direction, unaware that this shift is occurring beneath the surface of the daily news cycle. This multi-trillion-dollar movement represents a rare period of extreme capital mobility, and ignoring it means missing a redistribution of wealth that only happens once every few generations. For the last half-century, America's economic power has been concentrated within one demographic, the baby boomers. This generation capitalized on a unique period of post-war growth, securing residential property before rapid urbanization sent values to record highs. At the same time, they captured the explosive growth of the modern stock market, reinvesting dividends during an era of consistent long-term S&P 500 gains. Much of this capital remains locked in physical assets, local enterprises, and family-owned firms that have provided steady income for decades. But as this generation enters retirement and beyond, these assets cannot remain static. Time is forcing this capital into the open market, creating a massive influx of liquidity. The standard expectation is that this capital will simply move down the family tree, passed directly from parents to children through simple inheritance. The transfer involves a diverse mix of assets: residential real estate, equity portfolios, retirement accounts, and corporate holdings. Economists project that tens of trillions of dollars will move through these specific channels over the next 20 years. This volume of moving capital shifts the nation's entire liquidity map, moving trillions from long-term, static holdings into active circulation. Acquiring a fortune requires a specific set of behaviors. Maintaining it requires a different, and often more disciplined, set of skills. Data on generational wealth shows a persistent trend. Many families lose their entire net worth within 2 generations of the initial transfer. Rapid evaporation usually occurs through a combination of luxury consumption, poorly researched investments, and the accumulation of high-interest debt. When an unprepared heir loses a significant sum through bad spending, that money does not disappear from the economy. That capital flows into the hands of the businesses, creditors, and platforms that facilitate those transactions. It moves from a private inheritance back into the broader market. The mistakes of heirs act as a release valve, pushing trillions of dollars into a pool that can be accessed by any investor with the financial literacy to identify the flow. History shows that massive shifts of capital always fund the next era of industrial leaders and new investment classes. Just as the move to early digital computing created new avenues for capital in the 1980s, the current transfer is finding new destinations. As heirs spend or reinvest their windfalls through modern apps and digital platforms, this capital is concentrating in the artificial intelligence and fintech firms that power these systems. These sectors are effectively taxing the transfer as it happens. This is a massive reallocation of capital. Anyone positioned within these growth sectors, either as a founder or an investor, is in a position to intercept these funds as they move through the market. This creates a clear gap between passive heirs who are draining their accounts and the smart money, individuals who are studying the mechanics of this shift. These investors spend their time learning how asset valuations work, identifying market inefficiencies, and tracking the velocity of this new capital. The biggest transfer of money in history will disproportionately reward those who build the technical skills to capture it, rather than those who simply wait for a check to arrive in the mail. The choice is between building the literacy to navigate this shift today, or watching from the sidelines as the largest pool of capital in history finds its way to someone more prepared. In the coming years, your financial standing will depend on a single factor: whether you took the steps to understand this reallocation or let it pass you by. Subscribe to gain the financial education necessary to track these movements and understand the underlying mechanics of American wealth.